September 16, 1992, the day when investors made the British pound collapse and walked out with billions of dollars. The biggest hedge fund at the time that was very public on the weaknesses of the pound was the Quantum Fund led by George Soros. Back at the time, Soros was already well known in the world of finance, but not many people heard about him outside of the money world. But this was about to change. Even though most people credit the idea of shorting the pound to Soros, actually the idea came from someone you might never heard about. Stanley Druckenmiller was working with George Soros at the Quantum Fund, and he was the one who managed the trade against the British pound, which led the fund to reportedly make $1 billion in a single day. But what happened exactly? In October of 1990, the United Kingdom has joined the European exchange rate mechanism, which was basically an agreement between EU countries to link the currencies that are being used in the EU to minimize the daily volatility. In the late 1980s, early 1990s, the UK has been dealing with inflation between 6 to 8%. Compared to other countries, Germany, as one of the most significant ERM members, had way lower inflation. The logic of joining the ERM was that Chancellor Nigel Lawson believed that being in a fixed exchange rate first would help to reduce inflation, and second, provide more stability for exporters as they knew what the exchange rate would be. So overall, it would make the British economy stronger. Britain decided to join the ERM at an exchange rate of 2.95 Deutschmark for each British pound. The British government was required to keep the exchange rate within 278 Deutschmark to 313 Deutschmark. If the exchange rate ever neared the bottom of its permitted range, the government would be obliged to intervene. But Druckenmiller saw that it was not sustainable. In 1989, the UK hit inflation 3 times the rate of Germany, interest rates around 15% and much lower labour productivity than France or Germany, which indicated the UK's different economic state compared to other ERM members. So he went to Soros with his idea to short the British pound. Short selling is a trading method where an investor sells a security that they do not own with the expectation that the price will fall. In the case of the pound short, Druckenmiller and Soros borrowed British pounds from anyone they could, and they bought Deutschmark with it. When the price of the pound started trending down, they were able to convert back the Deutschmark at a significantly better rate and make a profit. Since the pound was trading at the lower end of the agreed level, this was a brilliant and well thought out strategy. If the pound tanked, Soros would make billions owing to his short position. Any increase in the value of the currency is virtually impossible, given the fact that the market was now convinced that the pound was overpriced. After they opened the short position, Soros was very public about this trade, which made other hedge funds curious and eventually caused a lot of short interest against the pound. On the morning of Wednesday, September 16, 1992, the Quantum Fund increased its short position against the British pound from 1.5 to 10 billion. And even with this much leverage, Druckenmiller says it was a safe bet.
Soros leveraged his portfolio and ended up betting more than the entire value of the funds he managed.
But basically, you took the whole quantum fund and bet 1.5 times that. That's really called betting the ranch.
Well, no, actually, in terms of the risks we take, it wasn't. It wasn't even a full exposure. Because the risk of loss was maybe 2.5%. So if 1.5 times 2.5% would be, let's say, 4% loss, it wouldn't have killed us.
So that really was a fabulous one-way bet.
That was. It was a safe bet, but it's a question whether it was worth making it. That bet has been available for the last 10 years, and it only paid off at that particular moment. So this is where this equilibrium reached a climax.
By the time London markets opened, tens of billions of pounds had been sold, placing the currency to be trading dangerously close to below the levels mandated by the exchange rate mechanism. British officials responded by buying up the pound with their foreign currency reserves in order to prop up the price and induce an uptick in the demand for the British sterling. However, the huge supply glut could not be mitigated by the purchase of the currency, and its value still remained surprisingly low. Having no other options, the British government was forced to drive up interest rates to manage the currency and prevent it from free-falling. At around noon, local time, an increase in interest rates of 200 basis points from 10 to 12% was announced. However, the pound continued to plummet. Investors around the world who owned British pounds were convinced that the currency would continue its downward trajectory, thereby prompting them to offload the currency and cut their losses. This caused the situation to accelerate further. That night, Britain left the ERM and floated its currency on the open market. The Quantum Fund and many others were able to cover their shorts with huge profits. While Druckenmiller has managed this trade, he believes without the help of Soros, he wouldn't be willing to bet more than $2-3 billion.
Right. When I went in to tell Soros that I was going to short 100% of the fund in the British pound against the Deutschmark, he looked at me with great disdain because he thought the story was good enough that I should be doing 200%, because it was sort of a once in a generation opportunity.
With the brain of Druckenmiller and the experience and intelligence of Soros, the Quantum Fund has generated $1 billion in profits. With the brain of Druckenmiller,
it was a conclusion that could not be avoided under any intellectual thought process. And I must say, as the person actually managing the fund, that would have led me maybe to do $2 or $3 or $4 billion. And that was where the combination of experience, courage, whatever you've heard about this man came into play, because it was he who pushed very, very hard on me to take the position to where we took it, and actually wanted to take it further, but we didn't. We ran out of it.
Even in very tough market conditions, there's always opportunities to make money. Right now, in 2023, while we have confusing market conditions, it is still possible to make a lot of money and be prepared for the bull market.